So how to become the top 1% of traders, and I thought I would create this video because it sounds like a bold claim, but actually if you look at these statistics, after 5 years 1% of traders will profit net of fees. We've got umpteen studies that say how traders fail and how most people lose money, and even if you go on to the CFD and spread bet brokers who are now regulated by the European Securities and Markets Authority to put how many traders actually lose, you'll see it's often close to 70 to 90%, and that is of course the window dressed figures. So I have been consistently taking money out of the market since 2015. Obviously my P&L has varied in that time because during COVID it was very easy to make money. There's been times where it's been quite difficult and testing. And I'm not an expert trader by any means. I don't consider myself to be hugely good, but when you take away most traders who actually fail, the bar to being successful is not that high. Now, that doesn't mean that it's easy. It's certainly not, and I will never say that it is easy. In fact, anyone who says that it is probably selling you something or lying or both, so that is just wrong. But there are certain things that you can do to get there, and sometimes it's knowing what not to do rather than knowing what to do, because I'm convinced that I could give 20 random people the blueprint to trading success, tell them exactly what I do and how I do it, and a lot of people just wouldn't have the discipline or the mindset to actually see it through. Now, is that because they're dumb? No, it's not. There's actually a lot of successful people in life fail at trading, and the reason for that is because we are just not really conditioned to trade. And if you think back in prehistoric times, it was very comfortable to go with the herd and do what the herd were doing. So if you heard a tiger roar and everyone ran, you better be running, because the risk to reward on that is if it's not a tiger, then you ran for nothing. If it is a tiger, then it's worth running. So that changed now. It changes now because in terms of markets, if you do what the herd is doing, you are going to get average results. So by definition, you have to not be doing what the herd is doing. You have to think independently, do your own thing, and that is how you make money. Obviously, there's a lot more to it than that. It's not just as simple as be contrarian, because being contrarian and taking views is not really being a contrarian. So you doing the opposite of what everyone else is doing is not actually contrarian. In fact, thinking independently and doing things for yourself is contrarian, and sometimes that might be buying the stock that lots of people like. You don't need to be doing what everyone else isn't in order for it to be a profitable trade. Sometimes the most profitable trades are the most popular stocks, and I can remember one time in my career a company called CloudTag went bust because it was a fraud, and lots of people were long this, and I held it knowing that it was a fraud, and I knew the product had been delayed 3 times, so I was questioning if it even actually existed. And there was a guy who had a blog, and this blog basically went far and wide and signed a lot of people up into this stock. A lot of people were subscribed to it. There was some tenuous links between Cisco and a guy called Jesse Pavelka and CloudTag. They were really tenuous at best, and a lot of these RNSs that came out, they lacked a lot of detail, but people just loved it, and I knew it was a fraud, and I held it because it was going up. So obviously the contrarian thing in that sense would be to short it, but why would you short a runaway mine train? It is so dangerous to be short frauds because people don't thank you when you highlight a fraud. You just get abuse, and that's been the case throughout my career. I've highlighted things that have been dodgy, People don't like it. People don't like it when you sell. I remember there was a company called Emporium. I said, be careful, because the revenues had suddenly spiked, and I wanted to see if that converted into cash, because, yeah, anyone can grow revenue, but it doesn't mean you were making a profit, and it doesn't mean that you were collecting cash. And then within 6 months it had gone bust because it didn't collect its cash. So yeah, no, obviously nobody thanked me or apologised, but that's just life. You have to have this ability to not really care about what people think in trading, because everyone's got an opinion and they're not always going to be good opinions. So, and also the stocks that you like, they're not going to be popular at the point where they start to make the move, which is why they make a big move, because they then become popular. So the idea of buying into a comfortable stock when everyone likes it, it's probably fully priced and there's already a lot of comfortable money in that stock, potentially institutions looking to exit and get out of it. So I think mindset is really key here, and a lot of people will pay lip service to mindset, but they don't really take it seriously. And I have worked with quite a few traders over the years now. I've helped them to become profitable. One person actually went full-time as a result, which I thought was quite impressive. But you need to have a certain mindset. You need to be capable of, my biggest wins come from 3 to 9 months. So I might put on a trade tomorrow and I might not really see the realised P&L for over half a year. So if you're wanting money tomorrow and excitement right now, you are not going to get it through trading unless you're an intraday trader, which is very hard to make money and it's very difficult to scale unless you are willing to tool up and automate and take risks. It's the hardest form of trading there is. Plus you've got all the commissions and fees. Whereas if you're trading less and you're trading better high quality setups, then you've actually got a better chance of making money. At least in my opinion. I'm sure intraday traders might say different, but for me that has been the case. And the reason for that is because if I am buying stocks that are unloved, so there's no market hype in the stock, they're just starting to turn upwards on the chart, so they're in early stage 2 uptrend, and there's a catalyst to move the price that people will eventually latch onto and start buying, that ideally is my kind of stock. And I like to see a lot of consolidation as well in that, so the stock will typically trade sideways for an extended period of time. So what you are looking for here is people to have just lost interest, and if you ask someone about the stock, they'll probably tell you it's rubbish because they haven't looked at it. A good example of this at the moment is a company called Naked Wines. So I've highlighted that one as a short in the past. I've done some positive and negative trades on it, both shorting it. And that looked to be in a company that was going to fight for survival. I didn't really understand how it could call it ring-fenced when it said it invested angels' money into finding new wines. So was it ring-fenced or not? I guess we will never know. But now it looks like it's returning to growth. And everyone will hate Naked Wines, and I'm not saying that you should go buy it. You probably shouldn't unless it sets up for your specific method. But what I am saying is that stock has taken a beating. It's down hugely from its highs. It looks to have done some sort of consolidation. It no longer looks to be going bust, and therefore there could be an opportunity. Again, I'm not saying there is, I'm saying there might be. So things like this are what I look for. Turnaround stocks where nobody has really realised and the chart is now showing signs of improvement. And this could be because institutions are buying in, or you've got people with deep pockets starting to swing the tide of the stock. But generally these three things: market hatred of a stock or apathy towards a stock, long sideways extended consolidation, and a catalyst and an upturn in the chart. So those are the three things that I look for. So some of the things that we've covered so far is mindset, the contrarian mindset, the way of finding stocks, patience. Also patience in terms of learning a skill. So let's say you wanted to become a plumber. You are not going to be able to do that overnight or in a few weeks, probably not. It's going to be an extended period of time where you have to learn the skills, learn how all the parts work, how everything interconnects. And if you think about it in the market, it's not just as simple as buying and selling. You've got auctions, you've got market makers, you've got sets QX, and this is just on the LSE. Then you've got the AIM market, AIM Rule 26, all of the different things that come with that, nomads, brokers, corporate brokers, retail brokers, RSP, DMA. So it is a lot to learn. You've got to learn how everything works properly and how all the parts interconnect if you want to do this properly and make money. And that takes time. And when you were getting started, you often don't know what you need to look for. So you actually just need to keep learning and looking for patterns and things that make sense. And it took me a long time. It still takes me a long time because I'm always trying to figure out how I can maintain my edge in the market. And I don't think my edge is anything really special. There's no proprietary, well, there's a few proprietary stuff, but very little. You know, if you took those away, I'd still be able to make money. In fact, if I had internet, a laptop with internet, I had ShareScope and a broker, I would be able to make money. And that is really what you need. All of the other things like FT, various inputs from newspapers, keeping on top of the news. Really, you should just be able to make money with a charting package and a broker. Keep taking a break because my arm is in agony. I did shoulders, lateral raises in the gym yesterday, so holding the phone at like a 90, the camera at a 90-degree angle here is, yeah, pretty tough. But in terms of mindset as well, you've just got to be willing to learn. And yeah, as I said, it took me a long time, but this is a sport that demands a lot of you. So it's not something that you can do half-heartedly, I don't believe, because it's just too difficult. And I don't want to put anyone off here, but unless you really love markets and you like reading and you're happy to learn things, then unless all of those things are true, you will probably struggle to make money, because people who are in trading for the money, they fail. And I remember one story from a guy called Trader Dante, who's very good, and his YouTube is worth listening to. He's a very sensible guy and, you know, very good trader and puts out a lot of good stuff. But he told me the story of when he was working at a prop firm, and there was one guy on the desk who had a really good day. I can't remember the exact numbers or if he even knew the exact numbers, but he'd had a really good day. And so Tom went home and he got to his house and he realised he'd forgotten his keys. He'd left his keys at the office, so he got on the train back towards the office, and he was saying it was really late. I can't remember the exact time, but as he got there, there was a single light on in the office, and this guy who just had the biggest day in a while was working on his edge and preparing his trades for tomorrow. So that level of commitment is, if you want to be really good, then that is sort of what is expected of you. Now, I myself, I'm not like that anymore. I'm not as dedicated for various reasons, I guess. Life changes. I'm not as young as I was anymore, and I've sort of got something that works, so I'm quite happy to stick to it. But where I play, you know, if you gave me 100 million tomorrow, I am not sure I would be able to beat the market, because my strategies would typically not work as much. So yeah, I would just need to learn a whole new load of skills like fundamental analysis, and yeah, I guess liquidity changes. I have to buy different types of companies. I would no longer be able to buy smaller stuff that I typically specialise in at the moment. So for that reason, I'm not the sort of person at the screens 12 to 16 hours a day anymore. Obviously, during COVID, that was the case. I rack up sometimes 16 hours at the screen before going to bed, waking up, going in my gym and staring at the screens again. So yeah, you've got to be committed and patient in terms of trades, but also you need to know what works. And one of the ways that you can do this is by journaling, and a lot of people just do not record their trades, and a lot of people don't make any money. And yes, there is a causative correlation between this. In fact, I think if you want to improve, the single best thing that you could do right now, today, is to print out all of your trades, get some highlighters, and go through them. Ask yourself why you entered, why you exited, what happened there, what emotions were you feeling, what happened 4 weeks after you closed the trade. Because if you're finding most of your trades keep going up and you're selling them, then what you could do is sell half and run them with a tight stop, but you wouldn't know that unless you had the data. So you really do need as much data as possible, because that is where you will make your money. It's not by looking at more charts. Okay, it is to an extent, because the more stocks that you cover, the more likely you are to find good stocks. But your trading journal is rich in trading gold that is just ready to be mined. So do that. And spending time with your journal is not, it's just never a bad idea. It's always going to yield something, or even just adding to it and keeping on top of it. You are keeping things fresh. You know what the strategy is, you know what to do, you know what to follow, you know where you're losing money, so you don't need to be reminded by making terrible trades, because you'll see them in your journal, so you know not to do those types of trades. You also need to look after yourself physically as well, and I'm not saying that you need to be a bodybuilder or you need to be an ultramarathon or a triathlete person. You don't need to run a 5k in less than 20 minutes or anything like that, but someone who eats right most of the time and exercises, you will feel so much better than someone who eats garbage and doesn't exercise. And you know, that is, it's just true. And if you feel better, you are likely to perform better. And this is why we are seeing a lot of elite sports people. You know, they've got their own sort of board of directors. You've got a director of sleep, director of nutrition, all of these various people, experts coming in to optimize all parts of their life. And I'm not saying that you need to get yourself a director of sleep, but you do need to get enough sleep. So sleeping for 4 or 5 hours a night is not really conducive to success. And obviously, if you've just had kids, you're probably only going to sleep 4 or 5 hours a night, if that. And yeah, there's not really much you can do about that. Maybe pause the trading or lighten up on the trading. Don't go in as hard. Obviously, if you're a full-time trader, you don't have that luxury, which is why I say to most people, you don't need to become a full-time trader. Most people, I think, if you have something that can sustain you and there's no pressure to trade, and that alone will make you a much better trader. Because there are people who've come to me, they've lost their job, they don't have any source of income, and they want to learn to trade, and they're on a time limit. And I've said, look, if we work together, it's going to be very difficult for you to remove all of that emotion, because there is a lot of emotion when losing your job, and especially when you're on a time frame or your spouse is telling you that you need to actually make some money. That is just pressure that is going to make it very difficult. And it's going to make it very difficult for me as well. And if I'm going to work with someone, I want them to succeed. So the first thing I say is just get a job. Because if you can get a job, that removes all of that pressure to actually make money. And then it frees you up to actually focus on something that should be enjoyable. Because, yeah, trading, sometimes you don't want to look at charts. Sometimes you'd rather do something else. But in the long run, it's enjoyable, which is why we do it. And why, if you're only doing it for the money, you won't succeed. But I realise that I've rambled on quite a bit for now, and hopefully this has been useful. But I'm absolutely happy to answer any questions about anything that you have in the comments. And thanks a lot for watching, and yeah, I'll see you in the next one.